We are now going to be looking at travel allowances. Now, before continuing with the rest of the slides, it's just important for you to note that to really understand my approach that I'm going to follow with the travel allowances, you have to use these slides in conjunction with the actual lecture examples. These slides are not going to contain the most up-to-date amounts in terms of the travel allowance tables. In fact, you'll see I've just thumb-sucked the values in the table. I'm going to be teaching you an approach or a principle, and you have to work with the latest lecture examples as well as with the most recent rates, tax tables to understand this. Now, please note that you will be provided with the most recent travel allowance deemed costs in the exam. You can also find it in the latest version of the SACA student handbook. And you'll see that on the student platform, there's also a document called tax rates and tax tables that contains the most up-to-date rates. So please, I recommend get that out and have it with you if you want to follow with the most recent rates. But please understand that I'm going to be showing you an approach here, because the tax rates and the tax tables change every year. So you shouldn't study towards a certain amount. You should study to understand how to apply it no matter what changes. So what is a travel allowance? First, remember that an allowance is an amount that you receive in cash. It is not an asset that is given to you like a motor vehicle. If your employer gives you a motor vehicle to use, so they own the vehicle and they say, here's a car for you to use, that is a company car, and that is a company car fringe benefit. The tax implications of that is completely different from a travel allowance. Travel allowances, they say, you have to have your own vehicle, and we give you money to pay for the costs of traveling. Now, you get two types of travel allowances. You get a fixed travel allowance or a reimbursive travel allowance. A fixed travel allowance, and this is probably the most common to see from an academic perspective, but a fixed travel allowance is where they pay you 2,000, 3,000 rands a month, for example. So every single month, you get the same amount. If you travel more or less, you get the same amount of travel allowance every single month. It's fixed. A reimbursive travel allowance is where your employer gives you, pays you for the business kilometers traveled. So they, for example, will say we pay you 7 rands per kilometer. If in March you travel 1,000 kilometers, you get 7,000 rands. If in April you travel 500 kilometers, you get 3,500 rands. So they compensate you or reimburse you per kilometer traveled. Both of these have the same tax implications and work basically the same way. There's just a small shortcut they call the simplified method when looking at the reimbursive travel allowance, which is available to you potentially. Now, in both these situations, how we are going to be calculating the travel allowance is by doing this calculation. We're going to take the allowance that we've received, so the 5,000 rands per month, for example, or the 7,000 or the 3.5, whatever it might be. You're going to take the allowance that you've received, and you're going to deduct from that amount the business expenditure. Now, that business expenditure will either be the actual business cost that you've incurred or the deemed cost. So that is what we're going to be looking at. But important, this is super important over here. The only time that you can claim this deduction here is if you kept a logbook that shows the business kilometers that you traveled. It's an accurate logbook. If you do not keep a logbook of the kilometers traveled, then this deduction over here is not available to you, and you will be taxed on the full amount of the allowance that you've received. So very important to keep a logbook. So we're going to start here, and you'll see I say a fixed travel allowance, but this is also available for the reimbursive travel allowance. Alright, so this business expenditure we're talking about here is this business expenditure that I mentioned over there. So we're just replicating this for now. We're saying that you have either the deemed cost or the actual cost, and you'll just see I've just given you some references. For the deemed cost, you will use the deemed cost table. And for the actual cost, you will have to use the actual costs, and you will also be able to include a wear and tear amount. The taxpayer will choose whichever one of these costs gives them the highest deduction, because the higher the deduction, the lower the tax. So obviously, let's just make sure everybody is happy with this. If you received 1,000 rands allowance and you have a choice between the deemed being 600 rands and the actual being 800 rands, which one are you going to choose as your expenditure? You'll choose the 800, because if you use 800, then you'll be taxed on 200. If you choose the 600, then you'll be taxed on 400. So the higher your deduction, the lower your taxable income. Now, it's not against the law. You're not breaking the Tax Act. If you choose either one of these, you can choose the 600 or the 800 if it's available to you. But from an exam perspective, the assumption is that we're always going to go for the one which gives the better tax or the lower taxable income. So now we're talking about the deemed cost table. So we're talking about the deemed costs. Now, this is the tax table that is available to you. So what this tax table does over here is it gives you the costs that you may assume that you've incurred. So this is not the actual costs. They just allow you to take this and view these costs as if you incurred it. Now again, guys, as this important notice here tells you, this tax table is deliberately incorrect. It's not the correct amounts. The principles are still the same. So understand what the principles are. You must always refer to the table that is provided to you in your test or exam or in the latest Psycho Student Handbook. Okay, so what this table does is it gives you the values of vehicles, and they say it's including VAT. They give you all of these different brackets. So in my example here, where the vehicle cost doesn't exceed 100,000, where it exceeds 100 but it's not 200,000, etc., etc. They all work like that. It's updated every year. So let's first talk about this vehicle. What is the value of the vehicle that you must use? You must always use the cost of the vehicle when it was first acquired. So if in 2020 a vehicle was purchased for 250,000, you will use that 250,000 until you stop using the vehicle. You don't decrease it by depreciation or anything like that. If the vehicle was not purchased, so for example, if someone gave you the vehicle, donated the vehicle to you, whatever the case might be, you will use the market value including VAT on the date when you obtain it. What is the vehicle's value at that time? And if the vehicle is leased, like under the installment credit agreement, basically for VAT purposes we call it, use the cash value. So in other words, you're paying the vehicle as a lease, but what would the value of that vehicle be if you bought it cash? That's what you will use. You can also find these rules in the regulations and notices section of your Psycho Student Handbook. So you've identified where your vehicle sits. Let's say it sits in this bracket. There's then three costs available to you: fixed cost, fuel cost, and maintenance cost. Now, a couple of things that you need to pay attention to around this. So first, let's just talk about what the fixed cost is. The fixed cost is intended to replace things like insurance, repairs, maintenance, wear and tear, finance charges. All of those things are all captured in the fixed cost. That's the idea behind it. Fuel cost and maintenance cost is exactly what it implies. So sorry, maintenance cost is just separate. It's not included in that fixed cost. So maintenance cost is separate. It's more like repairs and things included here. You get the fuel cost and the maintenance cost if you are responsible for it. So if your employer pays you an allowance, you need to still be responsible, pay all the fuel yourself and pay all the maintenance costs yourself to claim these costs. If, for example, the reason your employer covers those costs as well, you can't get it. All right. Now, the fixed cost is a rand per annum, so a rand per year. So it's 28,000 a year, 50,000 is what I'm showing there. The fuel cost and the maintenance cost is cents per kilometer. So if it says something like 116.0 or 133.5, it means it's 1 rand and 34 cents if you round it up. But I want you to see, so this you'll see in all my solutions, also in the lecture examples, the approach I follow, they take this over here and they express it in cents and they round it down to 1 decimal. So that is what I do as well, and I recommend you do the same thing. Please note, guys, I do not recommend that you convert it into rands. That 133 would be 1 rand's 33, 1 rands and 335, like that. That is obviously not a way in which we express rands and cents. Cents are only 2 decimals usually. It's not appropriate to round it up because depending on the kilometers, it can make a difference. So use it as is given here. Okay, a couple of extra things we want to talk about here. This fixed cost here is for a year. So if you had a travel allowance for half a year, for example, you would have to apportion it. Now, important, again, regulations and notices in your Cycle Student Handbook tells you that you must apportion it using days. So, for example, let's say that was the fixed cost, and you used this vehicle for 62 days in the tax year. You would have to apportion it by 62 over 365. 62 days is maybe 2 months, so let's actually make it 61. Right, let's say it's 61. So let's say you used it in March and April. It's not appropriate to multiply it by 2 over 12. Why? Because there's regulations and notices tells you to use days. Occasionally in some solutions you'll see them doing that. Guys, I don't recommend it. Use days. Okay. Then I just want to make one comment here at the bottom, this that we've highlighted here in red. You'll see that there's a top value or a maximum value they always give you. These two amounts will be the same. So let's say this was 800,000. Then this will also be 800,000. So basically what they do is they only go up to a certain point. And then all vehicles fall in this top bracket. That is the maximum amount that they will consider for the travel allowance. So let's say that was 800,000 and you have a vehicle of 1.5 million rands, or a vehicle of 2 million rands, or there's a vehicle of 3 million rands. They all sit in this final category. What is also important for you to note is that when we are looking at actual costs, remember we are now looking here at the deemed costs. When we are looking at actual costs, you are allowed to claim things like wear and tear and finance charges. They will also be limited to whatever is in this line over here. Changes every year. Okay, but we'll talk about that in a moment. So how do you determine the business cost? Remember what we're trying to do here? We're trying to determine this amount over here, this business expenditure. So how do you determine that business expenditure using the deemed cost? So let's say your vehicle sat in this category over here. So you would use the fixed cost of 92,683. You would calculate, this is a rands per year, you would change that into a cost per kilometer. So how do you do that? You take the fixed cost, you divide it by the total kilometers that were traveled during the tax year, and you'll see I multiply it by 100 here. That is to change it into cents per kilometer so that it's consistent with these. Be careful. You can't use rands per kilometer, and that would be if you say the fixed cost divided by total kilometers. You can't use rands per kilometer and then cents per kilometer. They need to all be the same. I recommend, because the fuel and maintenance are given in cents, that you convert this into cents. Right, so you put it in cents per kilometer, you add the fuel cost, you add the maintenance cost. You then have the total deemed cost per kilometer. That is multiplied by your business kilometers to give you your business expenditure. So to give you this amount over here. Simple as that. Then actual cost. So what is the actual cost? The actual cost is only available to you if you kept an accurate record of the actual costs incurred. So how much did it cost you in fuel? How much does it cost you in repairs and maintenance and oil and toll fees and finance charges? Finance charges, what we're talking about here is if you buy a vehicle and you're paying it off. So you buy it on credit, for example, or an installment credit agreement, or a car finance, and that interest that you incur. You can claim that as well. Please understand, guys, if you don't keep a record of the actual cost here, you just can't use it, but you can then still use the deemed cost. So the actual cost is only available if you kept the record. Then you have the choice of using the deemed cost or the actual cost. If you don't have the actual cost, you can only use the deemed cost. So guys, it's all the cost of running the vehicle, but you are also allowed to include wear and tear on the vehicle. Important, for travel allowance, the vehicle's wear and tear is calculated over 7 years. So we know that there are things like interpretation note 47 that tells you how to calculate the section 11E wear and tear, and it might be things like 3 years is a common one. We ignore that. It's always over 7 years. This is not a section 11E wear and tear calculation. Okay, so you take the cost of the vehicle, including VAT, and we use it. Now, important here, this cost of the vehicle is limited to the maximum amount in this final line of the deemed cost table. So in other words, if your vehicle, let's say, let me actually do it like this. Let's say this final amount here is 800,000. If the vehicle had a cost of 500,000, then you would use the actual cost of the vehicle. You'll see again, I recommend you apportion it using days. However, let's say the vehicle had a cost of 1.2 million rands. You would go and look at what is the max here, 800,000. So you would then use 800,000 instead of the actual cost. Right. So the idea here is that you use the lower of actual cost or the last line in the deemed cost table. That same principle applies to finance charges. So what do I mean by that? Let's say you have a vehicle with a cash cost of 500,000 rands, and the finance charges on that for the year was 50,000. You can then use that 50,000 rands in your calculation. However, let's say that your vehicle had a cost of 1.2 million rands and the finance charges was 150,000 for the year. You will then say, what is the maximum vehicle value here? 800,000. So this is 150,000 on 1.2 million. So what you will have to do is you'll have to say, what would be the finance charges on a vehicle of a cost of 800,000? So in other words, you can also say 150,000 divided by 1.2 million gives me the finance charge per grand of cost times 800,000. However you see that calculation is obviously the same thing. It's also illustrated in your examples. So how do you then calculate the actual business cost per kilometer? Again, remember we discussed there how to calculate the deemed cost. What we're trying to do here, guys, is again, how do we calculate this business expenditure here using the actual cost? So basically what you do is you add up all of your costs, the wear and tear, finance charges, all of the other costs. You add it all up This gives you a total cost for the year. So this will be, let's say it's 50,000 and 100,000 and another 100,000. That will give you 250,000. You then divide it by the total kilometers traveled. So the total kilometers is the business kilometer. Let's say that was 10,000. And the private kilometers that you've traveled, 2,000. So you will say 250,000 divided by 12,000, and that gives you a cost per kilometer. That cost per kilometer you multiply by the business kilometers to get the business cost. Again, you'll see when you look at the lecture example, very simple. So that's the deemed cost and the actual cost, the most important parts. Now let's talk about the reimbursive allowance. So again, what is the reimbursive travel allowance? The reimbursive travel allowance is if your employer pays you per business kilometer traveled. Now important, you calculate the travel allowance in exactly the same way that we did above. You can use the deemed, or the deemed and the actual if you get the record, but you also can use the simplified method. The simplified method is, if you refer to your Psycho Student Handbook, the regulations and notices section there, and again it's also in the tax rate and tax tables part, they will tell you that the government gives you a authorized rate per kilometer. So I'm going to just show you what I mean. So let's say your employer reimburses you 8 rands per kilometer. Assume the SARS rate that you get, the SARS reimbursive rate. Assume the SARS reimbursive rate is 5 rands per kilometer. So again, guys, this changes every year. You can then either say that you traveled the total, so let's say your business kilometers were 10,000. So that means you received 80,000 rands travel allowance for the year. You can then do the same calculation that we did above. So your allowance received would be 80,000, and then you would calculate the business expenditure using the deemed or the actual. You can do that. Or you can use the simplified method. And the simplified method means you say, right, 5 rands is tax-free, so that means I should only get taxed on 3 rands. I traveled a total of 10,000 kilometers, so times 10,000, so my taxable amount is 30,000. So that's nice and simple. However, please note that this simplified method is only available if you received a reimbursement per kilometer and you did not receive any other travel allowance. So what happens in some places is they will say to you, you get a travel allowance of 1,000 rands per month, and then we reimburse you 8 rands per kilometer. If that happens, the reimbursive method is not available to you. It must only be that your employer reimburses you for kilometers traveled. So then it's a allowance per kilometer, less the rate stipulated in regulations and notices. Again, guys, this changes every year, and you will be provided with that. Then just 2 special notes here, not very common to see, but let's just quickly make a comment about it. If your employer gives you a company car, so they say, here is the actual vehicle for you to use, and they give you a travel allowance. So they say, here's a car for you to use, and we give you 2,000 rands a month as a travel allowance. If they do that, you will calculate the company car fringe benefit as per the rules on the 7th schedule. That's studied separately. And then the travel allowance that you receive is taxed in full. In other words, you don't get a deduction for the travel allowance. Right, all of those things that we just studied is not applicable if you receive a company car and a travel allowance. That travel allowance is then basically taxed in the same way that you would have a salary. So you would just tax the amount in full. We then also have some situations. So let me explain to you what I mean by that. It works like this, where Mr. A owns a car. He leases the car or rents it, the car to his employer for 2,000 rands per month. The employer then gives him the car to use as a company car. Now, I know a lot of you, when you look at it, you go like, that's very strange. Why would it work like that? And again, guys, most big businesses won't work like this. But this is something, sometimes when it's a small business, with the sole shareholders, so the owner of the business is also the only employee, people sometimes do all sorts of strange things like that. If that is the case, what happens? They say that rentals that you receive, the 2,000 rands per month, that will not be treated as rental income. Instead, will be treated as a travel allowance. Now, the reason why that's important is, if this was rental income, if it was treated as rental income, Mr. A would be producing income, so that would mean that he would be able to claim all sorts of deductions against that 2,000 rands a month. So this stops that from happening, because he's no longer treated as if he's receiving rental income, he's treated as if he receives a travel allowance. He will not be treated as if he then receives a company car. Although he is getting a company car, they will not treat him like he does that. So you will then basically just treat it as if he receives 2,000 rands a month, and if he kept a logbook, he can then claim his deemed cost and his actual cost on it as normal. Right, so this is an anti-avoidance rule that's discussed, and it's obviously not that common.